Good morning. This is Rick with Hit Run Candlesticks. It's August 15, 2024. The market's going to open up in about 45 minutes. So let's go through a few charts and the market. We'll see what we can come up with. Number one thing is yesterday before the close, I did buy some SPY puts, and I will be closing those out this morning. There's no doubt about it. And I will have a loss in here. So I want to just share that with you. I will give the market a little bit of time just to see if it's going to fail right up here. But we'll see what happens, okay? So what has happened here is we have broken through the 50, excuse me, the 50 period moving average. We've also broken through that downtrend line, and we're challenging, we're actually above at the moment, the 50% retracement right in here at 546.60, 546.60. The bulls are back in town, at least for right now. Bulls are back in town. If we take a look at the T21.23, it closed yesterday on the 60-minute chart. Bullish, not by a lot, but yet bullish. Let's peek at the, target-wise, if we continue, if the bulls can continue this, not necessarily today, a little pullback would be fine, then we're going to be looking at 553.67 up in this area here. Targets aren't hard to do. It's all about peaks and valleys, lots of touches with candles. We could put another target. I'm not gonna clutter up the chart, but another target would be 556.80, followed up here by 559.78 or so, and then we've got that 564.50 testing out the top here. So bulls are doing a pretty good job. I do expect a pullback. This morning's bullishness, a little bit unexpected. Wasn't quite expecting what we're doing here. This could end up being possible. When the market opens up, you won't see that candle. What you're going to see is just, a bullish open right in here, providing it holds. What could happen is we get a pop and drop. That is very, very possible. So be aware of that. Just keep an eye on it. And if it holds up, hey, let's be bullish, okay? Qs are doing a great job challenging that 50% area right through here, those three lines, headed to the 50 period moving average. For those that follow static trend lines, we have broken out, okay? So you have a bullish, based on all the rules that everybody puts in place. You can't change them because your gut says. You can't change them because national debt goes up. You can't change them based on who might be president. You build your set of rules. You stick with your set of rules through thick and thin. You have now broken out of a downtrend line. So by that rule right there, bulls are in charge. It doesn't mean that you don't have resistance up here. You do. But you can't break that rule. You can't ignore that rule. You can't look away from that rule. You can't tout it one day and then throw it to the curb the next day. So bulls are in charge on the Qs right now. If we look at IWM is just a sad shack. That's all it is. However, it has remained bullish through thick and thin, no matter what. If you look at this chart, that is a bullish chart. That is still trending up. And I'm on the weekly right now. We have these radical days here. We have these crazy, volatile, the IWM, one day it is, one day it isn't, one day it is, one day it isn't. But it remains bullish. It may have an ugly chart on the daily, and it does. But it remains overall a trending bullish chart. Nothing has changed with it. It's been bullish, it's still bullish, and it's bullish today. If we take a look at the diamonds are trying to run. Diamonds are bullish. Looks like they're going to challenge that downtrend. Now, the diamonds have been up enough. Look, I think we're bullish here, and I'm gonna make the assumption that we're gonna break out because they don't look like they're backing off. However, I don't necessarily believe it's just gonna break out today and stay there. If we did break out today, or even come close today, or even stop where we are today, I would be watching for a little bit of a pullback. Pullbacks aren't necessarily bad. Pullbacks can be very, very good. So, but it all depends on the severity of the pullback. So one thing that I would do myself is I'm going to come up here, and since this is all we have, we'll use this top. Let's go down here and grab the bottom right here. And if we start pulling back this line right there, we could have a problem below that line. What is that? About 399.60 here. I don't want a pullback back to that 50% line. Most of the time, that's what I look at. But a pullback back to this area right here, that puts us in way too much danger of the sellers actually taking some big time control. So right here, 399.60, we need to stay above that. We can peak lower than that, but we need to close above that area. And before the day's over, tomorrow maybe, the trend indicator will be up in that area. Tomorrow, probably not today. Trend indicator will be up in that area. So that will help out with making that decision. The transports, they look like they're headed to challenge that downtrend line. Overall, not a bad looking chart. You've got an inverted head and shoulders setting up. Very nice bottoming reversal chart pattern. In fact, I would venture to bet that for a lot of people around the world, it's probably one of the most favorite. It's easy to see. It works. Very visual. And it's doing its job right here. SMH. SMH is looking fantastic. Looks like we're headed to that 50-period moving average target right in there. We're holding the trend indicator. We don't have that road to wealth trend yet, not quite. And what that is this right here. So make that. We want price above the, whoops, there's the problem. Price is above the T-line, but the T-line is not above the trend indicator. So we don't have that road to wealth trend right in here. Here's what that would look like right there. Price above the T-line, T-line above the trend indicator, okay? I know a lot of people are following. I know a lot of people here for weeks. I know people that didn't even know what the VIX was until a few days ago. And all of a sudden, the VIX comes into play. It's on the news. It's everywhere. Everybody wants to talk about it. Mum is the word. Forever, nobody talks about the VIX. All of a sudden, the VIX gets a little bit of fire in its britches, and it runs up. And now look at where we're at. So for those that want to watch a little bit of VIX, peek at the VIX. But right now, you can see it's down. This was just a spike to the upside, and now we're back down to an area where there's just not any fear. But do keep an eye on it in case that fear starts coming up. If we start getting bullish, anyway, I'll keep an eye on it, and everybody else will just kind of watch that. But right now, all is good. All right, let's take a look at some charts here. Nike's doing fantastic. Nike's one that we're holding. Nike we put out there to our members, and I think there's quite a few members in it, so way to go. We bought it right back here, so we've been holding it a couple of weeks now. We're challenging that 50% area right now. We challenged the 50-period moving average yesterday. Still looking for it to go higher. Targets up here, we're at a target right now. Next target up is going to be about 87.65. And then the dotted deuce is always a target, 89.20. And then we'll put this one up here around 93. Please do keep in mind, okay, this is important. This is very important, that stocks just don't go straight up, all right? So watch for the pullbacks and tests. Watch for that. These are called PBOs, pullback opportunities. They also give you buying opportunities, add to opportunities, whatever if you're not in it It may give you a buying opportunity. If you're in it, it may give you an add to opportunity. So still watching this, still good. We're still in it. Looks fantastic. Another one that I've got my eyes on is Apple. Pretty much Apple. If Apple can give me a pullback and just it wouldn't take much, but I would like to see a definite pullback. So a pullback right in there. Right in there to me is above the T line, so we can move higher than pull back, but we get that pullback, and then I'm going to look for buying here. You can see that Apple has broken out of that downtrend line. We are now over the 50-period moving average. The T line is over the 50, the trend indicator is over the 50, and the road to wealth trend is in place. Netflix. I think Netflix is a buy. Not today. Okay? So look, Netflix is rocking here. There's a huge part of trading that is just simple patience and planning. The trader that makes the most money is a trader that has patience and a trader that plans. So here we go. Let's have patience, unless you're in it, and 2 thumbs up. If you're not in it, let's have patience and let's plan. And what are we going to have planned? What are we going to plan? What we're going to plan here is wait for the rest. Wait for the pullback. Wait for the opportunity. See how this rallied up, and then see how we went sideways right there? That was opportunity. That's planning. So let's plan. Let it move up. Let it rest. Patience is what it's going to take to wait for this. So let it set up, and then we'll look for that buy. Targets, we're going to go for this first high up here, and then we'll worry about these higher, the highs, and then we'll worry about anything after that. Once we make it up here, we'll be talking about it. Nokia. I think Nokia just might be a nice little trade here. It's a $4 stock right now. The 500 period moving average is sitting right there about 506. I want to turn this to a weekly chart, and if you look at that weekly chart, this is our rounded bottom breakout. This is one of our flagship strategies, flagship setups, and we've got this nice, just boxed in, if you look right here, very nice boxed in price action. What I'm looking for on a target is the dotted deuce and the 200 period moving average. There's always a spot in here where you can put some price action, target resistance in there. And if we see this high and then we see this candle, I'm just going to split the difference right through there. So there's some targets for Nokia all the way up to the 200. Get that. I need to get that out of the way. All the way up to the 200 period moving average is about 12%. That could turn out to be a very nice trade right there. So let's keep our eyes on Nokia. Great stock trade. PLTR. PLTR still rocking. Wait for your entry. If you're an entry up, if you're the person that, that buys on entries just as it moves up, it's a buy for you. If you're somebody that waits for stocks to pull back, that's a buy for you. If you're somebody that doesn't buy on Thursdays, well, this is not a buy for you. Targets up there, 31.85, 34.60, 37.60. We've been talking about this right here in the room and on YouTube. This has got to be at least the 6th, 7th time. PLTR, rocket. CHWY, look at CHWY here. CHWY's back in the game. CHWY came all the way down to the dotted deuce and the 200 period moving average, put in a belt hold, went sideways, and now it's confirmed the belt hold. We now have price above the T-line above the trend indicator. The road to wealth trend is empowered right now. So let's keep an eye on this thing. I think it's close enough. It is a buy in this area. Just mind your stop. If you're not careful that, you don't, I don't think I want to go like way down here to 23.60. Pivot stop. That's over 9%. stop. That's too much. But nice little stop in here. What works for you that you can afford, what fits your account. That's account management. That's a side of trading that you need to know. I'm kind of liking it above the T-line and the trend indicator. And just to give you a nice little target right there, you might not be able to see it. It's very light on my chart, but it's the 500 period moving average. And let's take this chart. Let's do that. It's about 11% trade to the 500 period moving average. Fox A is setting up. It's not the most perfect bull kicker. Well, actually, I wonder if I turn that off. Nah, still not. We'll put that back. There we go. It's not the most perfect bull kicker, but here we have this flagpole up, this big, solid, strong push to the upside, and then we have this rest right here on the T-line. We've got a doji bullish engulf with this third candle over here. You've got a Morningstar type signal. Fox A looks like a buy. Great risk reward sitting right here on the T-line. A very nice 3-8 trap for those that like the 3-8 trap entry setup. QDEL is setting up. This is a rounded bottom breakout. Target's still going to be the 200 period moving average. The whole trade on the rounded bottom breakout is about trading between the 50 period moving average, the blue line, and the 200 period moving average. That's the trade. And then inside that area, then you have your at your risk area. So, let's put some targets in here. There's one target. That will be a risk area. So we're going to look for that 45.65, and let's see if there's another one in here. Yeah, we're going to put another one about right here. 48.55, and I'm using price action over here on the left. Okay. Stocks like this, charts like this, they are not protected from a pullback. They are not protected. No chart is. This chart is not protected even coming all the way back to the 50 period moving average. No chart is. So this is why, be a chartist, be a trader. If you need help, contact somebody. Learn how to read the candlesticks, learn how to read the chart, follow your rules, keep your rules simple. That's the most important thing. Keep your rules simple, but know your rules, okay? All right, I'm way past my time here, so I'm going to have to cut it short. All right, you guys take care. We'll see you at the bottom of the hour when the market opens up. Let's have a fantastic day, and we'll see everybody here in the room, like I say, about 30 minutes, okay? You guys all take care. Thanks a lot.